2024 was a year for the headlines. From the rise of artificial intelligence, to geopolitical strife in the Middle East, to natural disasters across the globe, 2024 had it all. And as we start into 2025, I want to preview what this upcoming year will look like from an economic perspective. For those of you watching here in the United States, especially the start of President Donald Trump's second term, will likely result in changes to your everyday lives, both big and small. His four-point agenda of immigration, tariffs, taxes, and deregulation could mean major shakeups across various industries. As I mentioned in some of my previous videos, it is very likely that the president's first actions will focus on immigration, but be primarily directed on deporting convicted felons and those with existing deportation orders in place. The unwritten message is one of deterrence and a return to enforcement of existing immigration policies. Industries such as farming, construction, food processing tend to have a high percentage of illegal workers. The high-tech industry and the scientific research industry rely on legally admitted, highly skilled workers via the H-1 visa program. The farming lobby is very powerful and tends to vote Republican and will lobby hard against any draconian enforcement, as will the food processing industry. I suspect that you may see a short-term shortage in attracting workers, but they will do just fine in the long run. Yeah, I highly doubt that the average social media influencer is going to want to set aside their bling-encrusted smartphone, don overalls, gloves, and rubber boots to work at a chicken processing plant. The construction industry, which tends to rely on day laborers and are usually smaller businesses, will probably have a harder time finding workers as casual laborers lie low. Expect construction projects to slow down. The issuance of H-1B visas to skilled workers is probably going to be more selective, but not completely shut down. Closer scrutiny of workers from nations known for their hatred of the US and a history of military and industrial espionage will probably see their door slammed in their faces. I believe the rhetoric on tariffs is mostly a negotiating tool for convincing nations to crack down on cross-border immigration, for example, Mexico and Canada, and leveling the playing field for US companies. There will be positives and negatives for technology and manufacturing. On one hand, they will benefit from greater sales overseas as countries buy more US-made goods to placate the US and avert tariffs. On the other hand, export restrictions to prevent sensitive technology getting in the hands of countries hostile to the US could crimp some sales. Longer term, overseas manufacturers could set up US manufacturing, although this is hard to precisely gauge at this time. Concerns about short-term pricing pressures at the retail industry may be warranted, but over the medium to long term should abate as companies pick up some of the price differentials. For instance, margins on clothing and fashion are almost 500% to 600%. Your $50 pair of blue jeans probably cost the retailer somewhere around $8 to $10. This doesn't bode well for costly bricks and mortar operations and further provides an advantage for online retail. Deregulation is most likely to impact the energy, chemical, financial services, and healthcare industries. Healthcare does face headline risk as there is bipartisan support for cost containment. The recent killing of the CEO of United Healthcare and the subsequent coverage on social media shows that the lack of transparency, high cost, and perceived inhumane behavior by health insurance companies is a very sore subject among Americans. On the other hand, the healthcare industry, like the high-tech industry, greatly benefits from innovation and research. Deregulation and simplification of new product approvals could help the biotechnology and medical device companies. The large pharmaceuticals will very likely see pressures to justify high prices for certain drugs. The financial services industry will likely benefit from less restrictive regulatory capital constraints, less restrictive community lending pressures, and more business-friendly outcomes in negotiating bad loans and credit delinquencies. Financial companies, particularly investment banks, could benefit from greater merger and acquisitions, given a more friendly Federal Trade Commission. More relaxed environmental rules could help the energy and chemicals industries in the near term and spur expansion of manufacturing capacity. Don't hold your breath and drink the drill, baby, drill Kool-Aid. The energy industry's capital discipline and the limitations of geology are unlikely to open up the floodgates of crude oil production. Fun fact, not all crude oil is created equal. Second fun fact, refineries are not capable of processing just any kind of crude that shows up in their tanks. U.S. crude is light compared to something like a Mexican crude oil, considered to be a heavy crude. Most U.S. refineries, built in an era when U.S. wasn't a big crude oil producer, and heavier crudes were relatively cheap, are optimized to use heavy crude. Even if there is a significant increase in crude production, it will have to be swapped with other countries like Mexico for there to be any impact at the gas pump. Now, throw this dynamic against the debate on tariffs. You see what I'm getting at? I believe Shakespeare said it well in his comedy, Much Ado About Nothing. Natural gas, however, will benefit both from deregulation and removal of export restrictions against a backdrop of power demand from AI, crypto, and a backdrop of renewable energy projects. U.S. natural gas prices are almost a quarter to a third of the prices in Europe, and we could see growing LNG exports. Cryptocurrencies are on a tear because many believe that President Trump's deregulatory fervor will free the proverbial shackles on what some believe is the God-given right of people to make eye-popping gains. We would prefer to reserve judgment, nor render an opinion at this time. Finally, renewable energy stocks and the much vilified and misnamed Inflation Reduction Act. Stepping aside from the messianic zeal for or against renewable energy, the harsh reality is that economics play a far greater role on this sector than policy in the short to medium term. Fact, onshore solar and wind are per kilowatt hour the cheapest source of electricity. Fact, red states tend to have the highest installed base of wind farms and solar arrays. The Inflation Reduction Act provides funding for such projects, and projects create jobs. I highly doubt we will see a substantial rollback of the Inflation Reduction Act. Buying an EV is more expensive than a comparable internal combustion engine vehicle, and total cost of ownership is often much higher than many believe, as higher depreciation and insurance costs offset lower energy costs. Ergo, the EV adoption is unlikely to pick up without tax incentives. It's clear that change may be in store for the economy, but only with time will we be able to truly tell what Trump's agenda will mean for us in 2025. Thanks for listening.